No, but make sure, look, it's quite important that you make sure that your lender isn't having a lender view. There are a few lenders out there who have not passed on even as much as the major banks have. There's one particular...
non-bank lenders you're talking about?
Yes, non-bank lenders largely, who had the big interest rate cut last month and another one this month. Obviously, we haven't seen what they're doing. But they passed on, in one case, passed on none of it. Absolutely not a cent of it. And their reasoning being that their costs had risen,
now, that
whatever.
stinks.
Well, it does.
That stinks, and they should be whipped solidly for that,
name and shame, Bruce.
Yeah, why don't we? You know, let's do that. They were GE money.
Okay.
And GE has since decided that they are not going to do home loans in Australia anymore. They're not going to do car loans in Australia anymore. So they pulled out, made that decision, get out of those two markets, but also we're not going to pass on any of the 100 basis points. So you've got whatever customers they had now are sitting at a very big premium. We don't know if they're going to pass on this 75 basis points
I would presume there would be some of those people who would expect that would have been passed on.
You'd have assumed that most of it.
You'd think so.
The major banks passed on all of it eventually. They did 80 points earlier in the month, and they did 20, 25 later in the month. GE hadn't done any. So if you are with some of those lenders and they're not sort of close to matching what the major banks are doing, then it's time to change banks, or at least go and see a mortgage broker or something like that, somebody like that, to be able to help you move on to, possibly get out of whatever loan you're with. You might be stuck, you might have some penalties to get out, but at least you get somebody to show you some options.
What else can you do? You start to build a savings buffer? Yeah,
I think so. Look, the Reserve Bank cutting this fast, it's just with breakneck speed, quarter, 1 full percent, 3/4%. You need to start saving some money. This is
something's going on.
As sure a sign as any that 2009 is going to be a bit nasty. Job losses, the economy slowing down, profits slowing down. The RBA and Treasury are very worried about what's going to happen next year.
We're seeing the job losses already, aren't we?
Well, we are, and I think later this morning the new figures will be coming out. The new unemployment figures will be coming out, and they're probably likely to show a bit of an upturn. So we need to have, a little bit more. Everybody needs to have a little bit more money up their sleeve for that.
Things that you shouldn't do?
Don't relax. Don't sort of think, OK, there's an extra $150 a month coming in into this. Yeah, don't just sort of go, OK, let's blow it. Let's, make sure that you're doing something sensible with it.
Buy yourself a jet ski for Christmas or something.
Yeah, don't do that. That would be a sensible idea, would be to keep some money aside. Home loan, 25-year home loan, sort of fairly typical. This month's cuts are about $150 a month. In total, over the 3 months, if everything gets passed on that the Reserve Bank has done, it's about $400 a month. So that's a lot of money, and that will very quickly add up for the average home buyer, the average home loan owner. And, in 6 months' time, 6 fours are $2,400. It's a reasonable amount of money back in the kitty, but you need to start building a bit of a buffer. Or the other alternative is to start, an investment program using a portion of that $400 to invest back into a stock market.
That's right, because we shouldn't be frightened about investing.
No, well, look,
you've got
take a risk.
I think don't be scared of taking an investment risk. We've got market peaked, just a little over a year ago and fell about 45% to the bottom. It seems, although you can never tell until you've had about 3 or 6, 12 months hindsight, that we've probably seen the bottom of the market, or very close to the bottom of the market. It's probably a good time to be buying back in. You're certainly buying it 40% cheaper than you were buying it a year ago. So maybe use part of that $400 a month